Good morning, traders. So I'm at my desk, and just one of the trades that I've been sort of eyeing and talking about in my weekly market scans. And I thought I've had a couple of people say, "Well, how do you go from the weekly market scan to an actual trade?" And so I thought I would take you through one so you can sort of see the logic behind it. So one of the ones that I was looking at was Euro Yen. I've been talking about the yen pairs being predominantly bullish. So let's just go to a different layout. Let's go over to this layout. I love the platform Pro Real Time. If you're interested, if you're curious, it's not a sell. I'm just saying if you want to know, it's Pro Real Time, and there's a link about it in the bottom in the description. I like it because I can have different layouts, so I can just sort of jump between the different layouts, and so I can have a day trading one, I can have a tick chart, I can have stocks, I can have OHLC bars and candlesticks, and I have about 10 different layouts. Okay, so running through the different yen pairs, you can see that in principle, I've been talking about how they are bullish. They're ticking up. On the weekly one, they're looking nice. Euro yen was one of those. Pound yen actually wasn't looking so bad either. They're also ticking up. So they're sitting next to resistance levels. So Euro yen was sitting next to a resistance level on the daily. And one of the things that I spoke about was a way in which you could trade it, which was this is your swing low on the daily. So you could put your stop loss below that swing low or below the swing low. Both of them are valid, but there are consequences to using different stop losses. However, so that was my idea. That was kind of a, if you weren't going to be around, you could place a buy stop entry so that you get triggered on the break if you're not going to be at your desk when it happens. There's a couple of different ways in which you could do it, but that's the idea. So you get triggered in on the break like you are now, and your stop loss below that, and it's wide enough stop loss, and you target 3 to 1. The other one, the more detailed approach, is to wait for a break. So now we go through to 4 sort of, I've got different time frames. So I've got I've got a 15 minutes, I've got a 1 hour, a 4 hour, and a daily. And so basically the daily has started to break through that. You look at the 4 hour, it's just started to go through. You can see the 1 hour is starting to stall a little bit. So you have the wicks that are starting to form here. What is likely to happen? So this is the point about trading, guys, for the newer traders. You have a trading plan, which is if the market does this, these are the right conditions, the market's bullish, it's trending up, therefore I'm looking for a buy entry. So if the market then does this, then I will take my entry kind of thing. So in this particular case, what I'm looking for is a pullback to test this level, which is a very nice level of resistance. Now, sometimes currencies specifically can sometimes dip through levels. They don't always hold on those levels. I find often with other things such as stocks, they can tend to, those levels will hold. But it's crystal clear that this is a resistance level. So where could it come through to? Well, actually, it's possible it could come down to these highs over here. So anywhere in this area would potentially qualify. So my trade idea is this. I'm looking for price to come back to either this level, set up with a bullish candle, or even what can often happen, pay attention to the more sort of, you want a little bit more experience, is you get a bit of a double bottom, and you get, that's your shot. So that's definitely one way in which it can happen. So I've mapped out, it's a trade idea, it's a trade plan. This is what I need to see the market doing. I can wait for the market to come down to this level and do the same thing. So it can also take off, it could do a double bottom as well. These are the kind of things that can happen. That's really what I'm looking for. Am I guaranteed that it's going to happen? No, I'm not guaranteed it's going to happen. But it's not a crazy idea. We're seeing the yen pairs across the board move. The market might come and do this and then attempt to do a continuation. So it's a valid idea for sure. Therefore, but it doesn't come with a guarantee. Therefore, I have to manage my risk in case, not because it isn't a valid idea, but because the idea, unfortunately with experience, you know which ideas are valid. But hopefully this makes sense to you. We're seeing the yen pairs break higher. This has broken through a clear level of resistance so far. It could fail. So by the end of the day, it could come right down, and therefore I might not get a setup. I might not get a signal to get in. I might get triggered in and stopped out. There's kind of like only 3 potential outcomes here. For each setup. So here it could just fall right through. Therefore, I don't get the setup. So that's fine. I don't lose anything. I don't get the setup. I do get a signal and it fails. I get triggered in and stopped out. So then it's a losing trade, or I get a setup and it becomes a winning trade. So really, out of that, 1 is a no loss trade, 2 of them are no losing trades, and 1 is a potential winning trade. So it's interesting when you look at the probabilities from that perspective. So this is how I do it. So this is what I'm looking for. I'm looking for price to come back into this area and give me a setup. And it really is likely that it could set up here, try, fail, come down here, set up, and then go. It could come down, set up, try, fail, losing trade, come down here, set up, try, fail, losing trade. So I could have 2 losing trades here. It could happen in both places. So in addition to that, you could also look at Fibonacci levels. So for example, you could say, okay, well, I'm going to look at fib levels or pivot levels to see if there's any that overlap with this. So interesting, the 50 fib is close to this area. It's really good. In fact, probabilities imply that coming back here because of the fib levels actually makes more sense. Do I have my pivot levels? So no. So what I'm going to do is switch those on. So now and what do you know? My central pivot for the day is sitting at this level as well. So we've got a pivot, we've got a Fibonacci level and a pivot level and a support resistance level of the most recent highs down here. Those ones over there. So in fact, now there's a very good chance that price is going to come back down to those levels. So what am I going to do? Well, I can set an alert so that if I'm away from my desk, when price hits this level, I get an alert saying price is there, and I can set an alert there as well. So that's what I'm going to do. I'm going to set alerts on those and then wait and see how price sets up on it and then look for a potential long setup. So if I get a setup here, I have a choice. Again, if I get a candle that sets up on the 15 minutes, I could put my stop loss just below the candle, below the support resistance level. That's valid. I could also put it below the second one as well. So I could actually allow for both. Or I could wait for price to come down and wait for a setup there as well. All right, so there's a couple of different options here, and traders have choices based on their personal preferences, which is derived from personal experiences plus their strategy. Okay, so I'm just explaining the trading idea to you. Remember that I've explained when you hear about traders talking about where is the risk, this is what we're looking at. We're going, this is the idea, price should come down at some point to either this level or this level. So I don't know which one, it could find support here and go. We won't know until later in the day that it's very bullish and therefore it just goes. It could be weak. We won't really know. So it could set up there, could set up there. I could get triggered in. I could get stopped out. And therefore, and I don't have a lot of other setups right now that I'm looking at. Therefore, I'm going to risk maximum, my personal preference, 1% on that particular trade setup with a stop loss. Here's the thing. If it falls through this level, I definitely want out because it's probably then going to set up the daily bar is probably then going to close as a failed breakout or as a rejection. So I want out. Then I'll just take it again later on. And in fact, the funny thing is that the next time price manages to break through and pull back, then the odds of it actually continuing have increased. It's less likely that it's going to fail twice in a row. Could happen, but it's less likely. Okay, so that is the trade idea, and depending on how it turns out, I'll do an update video on it so that you can see what the outcome of that is. But I'm going to leave you with that, and if you have any questions about this, let me know. Thanks.